Now, Deal Street has actually been buzzing ahead of elections. So we thought, let's reach out to S. Ramesh, the Managing Director and CEO of Kotak Investment Banking, to talk about all the various deals that we have been seeing of late. You typically don't really see this kind of action ahead of general elections. But that certainly has played out to be very, very differently this time round, whether it's private equity, whether it's other capital market transactions that have taken place. So Ramesh, always a pleasure chatting with you. Thanks so much for joining us here on Markets at Noon. A lot of block deals of late that we've seen, private equity deals that have been announced as well. Why is that the case? Is it also the attractive valuations that are existing prior to elections, an economy that just started to show green shoots, and then once again, there's so much fear once again of a slowdown with what's happening in auto? You've got major disruptions in sectors like telecom too.
So thank you very much for having me on the show. I would say that if you look at calendar 18, we had a rather muted deal activity. We had some activity on the IPOs for the first 4-5 months, but there has been a hiatus since then. But if you shift scenes to fiscal 19, and particularly in the months of February and March, I think the deal momentum has really taken off. I think interestingly, if I just were to give you a synopsis of between calendar 18 and fiscal 19, I think investors had a reasonable menu to choose from this buffet. So the follow-ons, which is close to about 50,000 crore that happened in this fiscal, mainly led by block trades, as you mentioned, but notably more of OFS, the offer for sale, that got done from the BFSI space, particularly insurance and banking. And then you had a few select QIPs that happened, and some rights issuances. And maybe a comment on the rights issuances, even as I look forward, as you mentioned, for the current calendar. We are seeing sectors like telecom and steel witnessing rights issuances. It's something which investors should watch out for carefully, because typically rights issuances do come at attractive pricing with a good promoter commitment. So it's something they should watch out and really try to take advantage of. On the IPO activity, I think we had close to about 20,000 crore of IPO issuances during the fiscal 19. But I would just make a comment to say that on IPOs, what we are hearing from investors is they're still continuing to be a little cautious on new ideas. They like differentiated stories. Valuations, they're still focused on the valuations for IPOs. And we expect this kind of trend to continue as we look forward, even a little bit after the election results settle down. IPO activity is likely to be a little selective, differentiated stories, more from the FIC consumption, maybe a little bit of real estate. So that's the flavor of Deal Street that we saw. The government also completed a large disinvestment program, mainly led by the ETFs. You saw the 2 ETFs mobilized close to 45,000 crore. So in general, I would say that the 2 months of this year, the first 4-5 months of the fiscal were a busy period. And one last thing that I would like to say is that if you see February, March and the current trend, we are seeing marquee investors, global investors, particularly from the US and Canada region, getting quite active in buying blocks, participating in OFS as well as in IPOs as well.
Okay, so thank you for setting up the landscape of Deal Street at the moment, Mr. Ramesh. But, I want to just talk about the flavor of the season, which is clearly rights issues and QIPs. Now, when I look at rights issues in particular, it's primarily by companies that are not in the ideal situations. They are companies that are facing headwinds. For example, look at Vodafone Idea. If Bharti Airtel is also going to come up with a 25,000 crore rupee rights issue, is because it needs to take on the mighty Jio. There is all this talk of, well, the lenders have a rights issue for Jet Airways, which is pretty much bankrupt. So given that, how is there such a big appetite for these kinds of rights issues?
So first, at the outset, I don't want to make a specific comment on any of the names that you took, because that would not be appropriate. But when companies discuss rights issuances with us, I think they are on the backdrop of 2 or 3 considerations. Consideration number one, I think the promoters want to show commitment that they are involved with the company. Secondly, typically what we have seen, if you see some of the steel and other issuances that have happened in the recent past from larger companies, I think they tend to be quite considerate in their pricing because it's to existing shareholders. And therefore, we've seen investors in general, and I don't want to sort of take a single name, in general, like to take up their rights entitlement, sometimes take a little more. And in situations where there is witnessing of turnaround in sectors, I think we find that existing investors feel comfortable participating in rights issuances. So around the steel, some of the industrials, the telecom companies, I think we are seeing companies wanting to look at the rights issuance format. On QIP issuances, we are seeing it more from the banking and the finance companies as well as select real estate companies. And maybe I'll make a comment. If you look forward about QIP issuances, we do think that there will be selective windows where QIP issuances will happen. But my judgment is they'll happen more from companies with track record, reasonably large companies for some time to come.
Right. Mr. Ramesh, the most interesting thing about QIPs has been that banking QIPs or financial QIPs have been very, very successful versus some of the others. Do you think that the QIP... Okay, I think he cannot hear me, so we'll just get that thing going. So what he was saying is that QIPs would largely happen from large players. QIP would largely happen from what's happening over there. Rights issue is something which should go on, and OFS, okay, Mr. Ramesh is with us now again. Mr. Ramesh, if you could just tell us about the QIP market. You were talking about large companies, but if you look at the last 6-7 years, the most successful QIPs have been the banking or the financial institution QIPs. Do you think that trend would continue?
Yeah, so in general, I would say that if you saw 2017, that was the year of QIP issuances. Almost all finance companies and banking companies did issuances, some of them pretty large. I think so they're well covered in capital adequacy for some time. So we don't envisage that kind of a trend to happen in fiscal 20. But issuances from select real estate companies, some of the larger companies in the general capital formation space, as well as from select finance companies is where we see QIP issuances happen. To give a small illustration, when the windows opened for issuances in March of this year, DLF did a reasonably large QIP of close to 3,500 crores. That issuance was well received. So we think companies which are reasonably large, have a track record, and have a deleveraging considerations or genuine considerations where they want to expand, we think investor appetite does exist for these kind of companies.
Just a word on the new products that have been coming in, and as the markets have grown. So, you've started to see a lot of PE biddings that are happening for various companies. That itself is, something which is new and not seen very regularly in India. You have first REITs listing, which happened. A lot of people are now also looking in at various kind of preferential shares issuance. So, as the market grows, you think a lot more products would come in, which would generate a lot more institutional interest?
So before that, I just want to make a comment about the private equity financing. So while we spoke about the capital market window, I think we are happy to see that private equity financing has continued through the large part of calendar 18 and the first quarter of 19. In fact, if I recollect correctly, close to $25 billion have come in from private equity investors into various companies and various formats. So that's a large amount. We have also seen considerable exits, close to 24 billion in calendar 18 through exits of various forms. So that whole private equity financing, the financial sponsor group, have really been pretty vibrant. And our judgment based on what we are interacting is that this trend is expected to continue maybe a little more as well through calendar 19 and fiscal 20. Coming to REITs, I think you saw the first REITs issuance happened. In fact, we were involved with that. World over, if you study track record, particularly in the US market, which is a well-developed REIT market, I think generally REIT product has given better yields as compared to many of the products. In India, it's still at a nascent stage. But whatever early conversations we are having, we are seeing from issuers, there is interest to explore REITs in India. So I do think this is one product that you will see over the next 2-3 years develop in India. I think there's a little bit of a learning curve, but as we go through that, I think this is for companies in the infra space, companies in the real estate space, companies which have operational assets with yield income. So many of these kind of issuances will find the REITs product quite useful. And I would just like to say one statement that on REITs we have begun well. I was always concerned when we saw the first one or two issuances in InvITs. So as compared to that, hopefully REITs we've started well. And as it sort of starts to unfold, both issuers and investors will find a proper level playing space where they will find this issuance or product quite interesting.
All right. All right, Mr. Ramesh, thank you so much for taking out time for us. Hope you have a great next fiscal year as well. The investment banking activity has been on a high, and they see no reason to believe that why it should stop in a growing market like India.